following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a good weekend. Next weekend, obviously, is a little bit better. We've got the Labor Day holiday, in case you guys have been in a cave and somehow had a concussion. Don't get psyched up for stuff like that. Tell you what, Al is back on the controls at TFNN, and we're glad to have him back. He is the Rock of Gibraltar down there on the technical side. I'm so happy he's back. Tommy did a great job while he was gone, and Tommy does a lot of different things. And Steven was down there covering for him also, so it's good to have Al back. Tell you what, guys, we are going to look at the 10-year first. And what we talked about last week, and again, kind of all eyes are on the Fed again. I don't know if that's, going to pan out, all the rhetoric they've used the past couple of years that they're ultimately going to raise rates. I don't know if that's going to happen. We've been talking about that. And we looked at this 127.11, 127.14 sitting down here. And why is that? Weekly unfurloughs, daily unfurloughs. We talked about just waiting patiently until we get into some new inflection point environment. Not new inflection point environment, but just get into that inflection point environment. And there's that 127. There's the previous 127.14, the 127.11s, the weekly unfurloughs, and the current daily unfurloughs 127.12. So we talked about 127.11, 127.14, and just waiting. I'm a big fan of waiting patiently until these battle points are reached, and they were reached, and now we've got a little bit of a bounce here. So we talked about that coinciding with the situation on the S&Ps and the situation that the S&Ps were in as far as and the NASDAQ and the DAX. I'm going to pull all that up, and here's the S&Ps. Had a profile appear above, which we all know is bearish in nature. And here's the 240-minute view. We talked about a little bit of a lid around 1986, something to pay attention to with a new supply area happening. And all this was coinciding with that 10-year possibly getting down to that support level, which was just lovely the way that worked out. Also, we're going to take a look at the DAX really quick. This was one, we talked about waiting until we got up to 103.95 the other day, 2 days ago. This is, again, all coinciding with that, rate situation also on the 10-year. So, got some resistance on the indices, have some support on the treasuries. And by the way, I'm seeing my beard here. We're trying to grow the winter grasslands, if you will. So I didn't forget to shave this morning. So 103.95 on the DAX. You got 1986 on the S&Ps. On the NASDAQ, and we're talking about some indices here. On the NASDAQ, you've got, and let me show you where this little puppy is. You got 43.67. So you've got some decent numbers to orient stops around, in my opinion, on the north side. And again, we're looking at this from a bearish tone. And we've also got some support in the treasuries with stops below that 127.11 area. And all these are given pretty easily right in here. Here's our indices grid on our scanner just to review this. This is our weekly. There's not an index in the world that on a long-term basis is even within the balanced area as far as we're concerned on a net profile situation. If you watch this show enough, you'll know exactly what I'm talking about. If you want a little bit of a review on this, we've got a killer webinar, in my opinion, on the TFNN site. You go in there, you get a demo of the scanner, or you could just request access to that webinar. It's about an hour. Tom and I talking about this and trying to go over some of the pressure points here with the scanner and some of the definitions. I think we could do a better job of explaining this more, but if you watch this show enough, you'll hopefully get hip to what's going on here with this thing. And if you don't, send emails in, no problem. On the S&Ps, this is what we're looking at here. The daily and the weekly still breadth negative, short-term positive as of Friday's close, but these are based on internals. And these are going to flip around a little bit this morning. You got an S&P gap down, about 15 S&Ps last time I looked. Let me just make sure that's still the case. Yeah, 15 and a half. So that's the situation on the globe here, if you will. And again, I'm going to go back there so you can see it. This is our daily ranking. This is our weekly ranking. So the long-term tie to the marketplace on every index in the world is still negative. Here's the 4-hour. Obviously, the short-term's jumped up a little bit. And we talk about how do you play those short-term jumps. We're going to get into that a little bit later. Here's the ETF situation as far as breadth goes. This is our daily ranking. This is our weekly. And as you can see, long-term tie to the marketplace is still looking for resistance to sell. All right, and we've got some of the ETFs we can focus on later, drilling down to the internals. Chart is black. You readjust that. How are we doing now? Are we good? Cool. All right, so that's the situation there. I'm going to go into my futures section. I'm going to show you those inflection points we just spoke of. There's 1986 on the S&Ps. Remember, you look at this, we're below profiles in the long term. We had that, big-time bearish situation happen with that profile appearing well above, and now we're just rattling around with the 240s. I'm paying attention to 1986 stops above. I think that's going to hold today. And going down into the 10-year, see that bottom? This is where we're at, folks. We've come down into this little DMZ down here. We bounced off of it, and now you can orient stops on the long side below that level. All right, so putting in a bunch of cool features into this week. You guys are going to be shocked of how many. Actually putting in some buttons to give you some quick access to long opportunities, short opportunities, turnaround opportunities based on profiles. And here's the situation on the euro. I'm going to go into this. I'm going to go into EUR USD right there. There we go. That big area, 112.0708, 112.25. We talked about that last week. And we're going to look at that in particular. And we've also got a yellow peel back on our weekly starting to happen here. So we're going to have to take a look at that also. How's my chart? Are we still up? Yes, no. Let me readjust this. This is probably my fault, not Al's. All right, so here we go. All right, euro. We talked about a target-rich environment off of those weekly unfair highs at around 112.07, 112.25. There's the 112.25. So now, I'd love to see this thing rattle around here. You've got, and again, that's the kind of the DMZ we talked about. Here it is on the weekly, right? A little bit non-directional right now. We talked about just a wait and see on this one, see if we can kind of rally back up in unfair highs on the daily. We've done that. Again, I'm going to try to orient stops based on my noise pain level, probably around 113, and I'm going to hopefully see this thing. Again, we've had a really big pullback on this, about 700 pips or 600 pips to be exact. And we could head lower, but again, keep your stops in. The euro, eternal troubles in my mind, but it's not going to go in a straight line. Let's take a look at Disney. Somebody in the den wanted me to take a look at that. Yeah, this was, I want to review this here. We talked, when this thing that week was, the announcement come out and everything, and then we had the 105 hit, and then we retraced back up into this 111.38. We talked about this a little bit 2 weeks ago, actually, that this was just an insane cool thing that happened that gave you a chance. The breakdown, the touching of inflection points on the long term, the rally back up into that breakdown area, almost to the tick. We reached a high of 111. That inflection point is 111.38. So you can't ask for, and that's one of the the really ripe opportunity setups, if you notice me looking around, I've got Chuck Norris workout videos going on other TVs. I have to see what he's doing every once in a while. Just kidding. 111.38. We always want to, have the high probability setups, and when you break down and then go back and retrace up to that breakdown area, namely this one on Disney, for example, those are the ones where you just literally blindly take the shots. These are just insane ripe opportunities, especially in a market that was showing its hand, the walk down effect. And then you're looking for stocks that may have some more juice in them on the downside. And my goodness, what is that? It's a 20. My God, even after the breakdown, that's another 20-point move. So last week, this is the situation here. We always want to look for these orange bars on the target kind of takeoff situation. We had one of those on, Tuesday? I'm just kind of walking through Disney for you. And what do you do now? So right now we're sitting above profiles on the daily, but on the weekly, still looking very damaged and no new indications, no new orange bars, no new attempts of new long-term profiles appearing. So you're kind of in no man's land a little bit down here. So to get short this thing again, believe it or not, and in my opinion, you've got a stock that's just come unglued and it's been bouncing a little bit sympathetically with what's going on. And you've kind of used 95.78 as support. In my opinion, we're probably going to rattle around a little bit in this fair auction down here before we do anything. So I don't think it's time to buy Disney. I don't think you've had any major signs. I know we're trading above profiles here on the intermediate, but my take on this is probably stay away from it. If you put a gun to my head and force me to trade it, I'm going to trade it from the short side again, and I'm going to wait till we get below 101.57 on a daily close, and then we may see 95.78 again, and that's 5 or 6 points, that's 5 or 6%, and I don't think you can complain about that. But remember, you got to put your stops in. Now, on a long-term investor standpoint, do I think it's time to buy Disney? No, just flat out no. I'm bearish on the market, and this stock does not. It's like free climbing without ropes right now on Disney for the long-term investor. I think you've got a decent bounce to possibly scale out of some of your longs if you were long suffering through this. All right, when we come back, we're going to take a look at one of my favorite trades, the Canadian dollar. Just blue skies ahead still on that one. Long side. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Good to be back. Let's continue here, and let's look at gold really quick. You know, I'm somewhat bearish on gold still. Here's the weekly situation. We talked about the major area here, actually getting back down below 1125. Excuse me. You have to wait until we get above 1125 to consider going long here. I mean, from a classical technical analysis standpoint, using these profiles, we've acted in a decent manner. Here's 1160, 1168. We talked about that DMZ as targets up top. If you guys were buying these breakouts, I was not buying the breakouts. I was looking at this as a shorting opportunity up top. So I missed the upside, but caught a little bit of this downside. And these are the targets down below in that 1125. Stepping back and looking at gold, this is the situation. We've had this happen before around 1300. Again, this is a hole in the marketplace, so to speak. This happened on a daily and a weekly. Price action moves quickly through these holes. Remember, these were market participants really didn't, pick a lot of hardcore battles in these areas. So, prices are going to be all over the place in these holes. We talked about that beforehand. So what do you do now? Here's the 1125, and here's the 1127 sitting here, or 1126, rounded off 1127. I'm passing on gold right now because gold could give it up easily, freak some people out, of course, and actually start trading down at 1100 and even lower pretty quickly. So again, I just don't, I don't see, and we're getting hit a little bit this morning, no big deal, but I just don't see a lot of leverage here. We could bounce around up again into that 1160, 1168 area, no problem. I mean, remember, we're still in the hole as it stands by definition above 1125. Yeah. John from Philly saying he's buying dip. I mean, hey, you know what? I mean, stepping back and looking at it, that's not a bad idea. I mean, at least you know where to orient stops around. That's the cool thing. So, and again, I don't like the way it reversed like that so quickly. That's a little concerning, but I hear you. Silver, we got to kind of take a look at this one. This is the one that's somewhat concerning. This is kind of classic right here from a continuation pattern, and then that's the weekly, and then you got the daily situation here. So again, we talked about waiting until we rallied back up recently into those inflection points at around 1457.58. That's happened. We're opening up this morning down. So the good news is you want to let the market come to you. We had the sell-off, we had the retracement back, former support, now resistance type situation, and now, I think you can orient stops above 1458, and that's just the way it works on silver right now. Where's the targets? I think your targets are initially 14, and it might even freak some people out and hit lower than that. But the good news is I think you got even though silver has sold off, and you're like, wow, shouldn't silver be on sale? Things on their highs can go higher, things on the lows can go lower. Always remember that. It's a whole different ball game trying to catch swords. Let it technically tell you that it's okay. Crude oil. Are we on December silver? Hold on. The reason I'm still using September is because the continuous contract still says silver. Oh, excuse me, still says September. Somebody was telling me to switch to December. We'll do that. We will do that. I want to just make sure that that's the consensus one. Crude oil, October. Okay, so the other day we talked about, we had the orange bar. We rallied up. I actually was thinking that we would get a little bit more of a retracement off of 43.38 and hang out down here a while. I mean, we caught a little bit of a pullback on that, and we pulled back actually to 41.78. But right now, man, this is ultra cool for longs. Now you've got support at 43.38 on the October contract on crude oil, and the target's now up top. Since you've got a new profile, we had that again signal last week, the orange bar. Now you got 48.71 up top as a target and 43.38 down below, and that's pretty cool because you got a POC also on the weekly. So what does this mean? You got two time frames saying that you've had some technical damage, you've had a close above, and look back. I just want to show you how impacting this is really. First time since 60, we've had some green shoots here. Now we can look at 43.38 as support on crude oil with targets up top from 48. So you might have some more upside with this. And shorts, we had our targets indicated on two different time frames last week. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Got some stocks gapping up, gapping down this morning, obviously, but we're going to take a look at the scanner to look at some situations, as we say here. We're going to continue to look at our breadth situations here, our 60-minute, and again, you know, we had the crossover recently on the 26th. All right, and that was the positive. And remember, these are kind of systems in itself. I mean, we had some volatility lately, so it's going to take these things aren't, considering that, these aren't going to be as to the tick as they have been. There's just a lot of play in these, but again, this is a kind of a system in itself. Here's our weekly, and remember, we had this broad change happen around June 4th, before you get between the 5th and the week of the 20th. I'm going to get this right in a second. I'm a little confused after my transgender therapy session last night. June 4th had that crossover. And we pretty much stayed breadth negative on the long term. And that's why, again, we're looking at the situation of selling resistance on the indices. And therefore, we're going to be looking for shorts and opportunities on resistance areas on the broad S&P 500 and the ETFs. So, you can drill into the ETFs. You can kind of figure out what's the seller situations here. Now, those can be turnarounds and violent turnarounds. Everybody knows that sometimes you get some mega moves here. But on these moves up, that's obviously been happening in the S&Ps off the bottom. What did we reach? 1850, somewhere in that neighborhood, and we're basically 150. What was the lows the other day? It's sad that I don't really know this by heart. Let's just look at these on the futures. So the lows, oh my goodness. Okay, 1830. I was a little bit off there. So we've almost reached 2000 again. So this is a violent move up, and in the last week when this has happened, you want to try to find things that are showing their hand. So we're going to try to find things and instruments that are just not cooperating with the move up. And, some of the utilities, materials, obviously the oil stocks, some of those have had a little bit of a bounce lately, but on the whole, they're not exactly doing that well relative to this market bounce. So let's take a look at, let's go back to the dashboard. Let's just look at the S&Ps in particular, because I don't think you guys really care what's happening on the Bursa Malaysia right now, which you can access. I'm gonna prove this to you. There's the Bursa Malaysia, the good old Bursa Malaysia. I'm making a light of that. We actually have a lot of people that look at that over in Asia. Kind of illiquid though, the Set 100. If you guys want to, there's a brokerage firm that we do business with over there called DBS Vickers. Look them up. They love this thing. Here we go. So what we're going to do is we're going to do a sort. We're going to go below the box, and there's just an enormous amount of stocks that meet this criteria. And as you can see, we're going to be able to find some opportunities, some that are sitting at the bottom of the most Cummings CMI rallied back up into that thing. Actually, Citigroup. Let's take a look at Citi. And the reason I'm picking the ones that say bottom is because I want to possibly today find out, ones that I can orient stops around, quick, easy little deals. So let's take a look at Citigroup here. And I'm just going to see where we come from here. Okay, so again, Citigroup, XLF. All right, this is, again, a really cool situation in my opinion. 54.41, bottom of the box. Got the market gapping down a little bit. I'd love to see this thing rally up a little bit higher. Here's 53.39. So again, profile appearing above price action. S&Ps have come a long way in a short amount of time. This thing has, kind of acted with the market here. If we don't get any rate hikes, you guys probably know this from listening to Larry, Steve. I forget everybody's name. I have one more cup of coffee to go. Tom, Basil, David, the whole nine yards. Daryl Martin. If there's not a rate hike, then the yield curve stays flat. Therefore, banks are not going to be happy because they can't rip you off more. All right, so I hate Wells Fargo. Have I mentioned this lately? So, you got that looming out there, and I think the banks have kind of figured out that might not be a lock. What they've been saying is a lock for every time they meet, they're going to raise rates. It's not happening. When it happens, it happens. I think the treasuries have probably got everything factored in, to be honest with you. And the 10 years on support. So take that for what it's worth. The bank stocks probably won't like that. And you've got opportunities, in my opinion, on Citigroup to sell. Let's look at JP Morgan. Very, very similar situation. I mean, all these bank stocks, look at these. I mean, they've obviously had just a massive move up, but you want to wait until the market comes to you. And this is another great example of that. You got 64.70 to 65.27 DMZ there, if you will. Again, profile appearing above price action. I just think that these are ripe opportunities, and you got some targets down below in JP Morgan, 60 and even lower on this type of trade. You got a good risk reward. And the reason I'm picking up JP Morgan, I just wanted to, let's go back to the scanner and let's just stay focused, because we've got a lot of Bank of America. God damn it. Excuse me. I saw a lot of bank stocks on our sort we're doing. So we're just going to go right into the ETF financials for a second, just so we can access them all really quick. Here we go. Did I tell you guys we're in our company we're consolidating all holidays into one day a year? Everybody's really happy about that. With the Labor Day coming up, this Christmas, Thanksgiving, everything's laser focused on one day. Getting some hate text right now. All right, so we're going to take a look at the XLF, and as you can see, I'm going to kind of click on our task says here. It says long-term breadth coincides with the intermediate-term breadth. Both are negative, therefore market direction favors shorts. For the long term, any rallies into 24.57 from below to be looked at as primary long-term resistance. Blah blah blah. So let's take a look at the XLF first on our chart. And this was the, obviously being a Monday morning quarterback, letting you know what did happen. So I'm playing Captain Obvious right now. But, what do you do with this now? This was a heavy-duty break. I was looking for the XLF to break a long time ago. It just didn't happen. But right now, we're in the middle of a fair auction on the daily, a very wide profile, right? There's not a lot of direction here on the ETF itself. So what you're looking for in the environment that I just spoke of is you're looking for stocks that are the weakest situations that have the inflection points that you can count on within the sector. So I'm going to go back to this one. We looked at JP Morgan, Citigroup. I'm going to take a look at Bank of America, my second favorite bank. And wow, weekly 1644. Again, this is a relatively cheap stock. It's not $100, and you might be saying to yourself, God, I can't short a stock at 16. My upside's 0, and my downside's like through the roof. Just remember the Alamo, remember Alcoa, remember what happened there. Put your stops in. This is Alcoa, and by the way, this nonsense started around 17. We've gotten sub 8. We actually hit 7 and some change last week, 797. And the recent breakdown at 13 was the scanner showing itself. So I'm just going to, kind of let you remember a couple of things. And now, considering that we had that this orange bar appearing, we got the new profile. We're in the middle of a fair auction. In my opinion, again, staying with the trend, you've got some decent selling opportunities again around 949 on Alcoa. But I didn't mean to get into aluminum there. Just wanted to reference something that was relatively low priced and continued to head lower. Things in our lows go lower. All right, we're still in the XLF here. We're going to take a look at a couple other stocks here, and we're just going to look at one, Bank of America. There's the Citigroup. These are the ones with the inflection points just right in your face. CME Group. This is not one I'm that excited about on the short side. Genworth Financial. Let's take a look at this one. Okay, there we go. GNW. All right, so saying we're in the vicinity of the top of the profile here, this is one that looks relatively attractive to me. And what we're going to do is we're going to look at the daily. No new profiles attempting to appear there. This is a $5 stock. Again, this is borderline marginable, all that kind of stuff, so we're going to stay away from this one. I apologize for pulling it up. Let's take a look at Iron Mountain, IRM. If you never looked at these stocks, this, scanner's just kind of putting them on the radar screen for you. Here's the situation on Iron Mountain. Again, my idea for the broad marketplace is that we will relax farther down. Therefore, I'm trying to find things that won't be painful if they go against me. Remember Friday, I kind of went off on a dark cloud tangent about, my friend had in Chicago, a really good friend of mine, had gotten clipped he feasted on the volatility, I would say, last week, and got burned. I mean, big time. He was selling premium. We talked about that a little bit, and what we ultimately decided, kind of morphing into a couple of digressions that I did, was you want to be able to play defense first, always. So you want to try to find things that aren't going to hurt you as bad if you're wrong. And considering that the broad market may go down, and we want to find stocks that are just kind of languishing, even as the market has bounced quite a bit here lately, 150 points or whatever it is on the S&Ps. That's like 1,500 Dow points, basically. This is one of them. Based on the technicals, and you got a little bit of a pressure point there to focus on around 28.73. Stops around. And what's the upside on this? Considering that Iron Mountain, we had a profile appear above that's really, really bearish, and you've got some other help around here, your upside's going to be basically when you start breaking up technically and just continue to let this thing fall apart. Here's the 240s. I mean, this is going to be like watching paint dry relative to trading the Amazons and the Apples of the world. Sometimes boring is good. Let's take a look at a couple other stocks on the radar screen here on the scanner. Let's take a look at RF Regions Financial Corp. Again, rate environment. Here we go. Breakdown, come back right up into that 965 area. This is the one you can play around with, put stops above. You got a profile that's appeared well above price action. I love this thing right here, actually. We may come down and revisit 9 again, and that's over a 6% move. That could happen pretty quickly. All right, let's take a look at IBM really quick. All right, so again, we had the big sell-off. We had the breakdown. We talked about 167.35. That was awesome. And we've reached 140 since then in a couple of weeks. But what do you do with it now? Now we talked about waiting for another profile to appear. We got that Friday, 150.26. I think you can orient stops around now. This company has tremendous issues, all right? And I don't think, the rest of the shoes have dropped on this as far as announcements. But again, the cool thing is technically you got some things to focus on, and things on their lows go lower. And this is going to be one of those cases. And I actually see long-term this thing going sub 100. Okay. Let's take a look at Amazon. Get massive amount of emails about this for some reason. All right. So again, a strong stock in a strong market. We talked about waiting for a pullback into 470. We obviously breached that a little bit, but during the same week in that gap down, and remember, let's just kind of go back to the dailies for a second here. In that gap down, this is one that has just blown a gasket on the upside. And we talk about, waiting until we breach some borders to start buying things sometimes on the upside or sell things on the downside. This is one of those cases. We'll talk about it a little bit more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
On, and we talked about it a little bit. Jesus Lord, it's the time of day people start we were talking about Amazon. We talked about the next level of support on this now is 504.09, and again that's about 14 points down. So if the market relaxes back, you've got another support area. If you got to put a gun to my head and buy something, this would not be a bad one. Let's take a look at the Shanghai, see what's going on there. This has been something without question that's been a driving force, and some of the profile appearing above. There's the rally back resistance point is about 300 points higher on this. I'm not doing anything with the Shanghai right now based on that. It's just we could rattle around down here and have some weird action, but the major break has happened, 35.54, and that's the Maginot line for shorts on the way up again. Taking a look at the dollar, this is one, had a close above last week, this 95.30 area we talked about. That's going to be the support area now to buy. And I'm still looking for that. I'm looking to explore this auction higher, 98 and even higher on the dollar. Got to keep that in mind. But stops below 95.30 based on the noise levels and appetites for risk that you guys have individually. Everybody's different. Everybody's trading on a different time frame a lot of times too. So that's the situation there. We're going to take a look at the Canadian dollar. I promise you we'd take a look at this. This is one of my favorite situations out here. It again continues to edge higher, and no new yellow bars attempting to appear on this, just like the yen trade was so good for so long. I mean, that thing was good for 2,500 pips. We were just buy the dip, maybe get stopped out every once in a while, buy the breakout, buy the dip. That's still a similar attitude here. I mean, crude oil rallying a little bit. Going to have to wait and see how that affects the Canadian dollar. As you know, they're kind of like Australia, dig a hole and see what comes out of it. Kind of economy up there for the most part. So let's take a look at the yen in that same breath. Let's go back here and let's. Why is everything? That's weird. Everything readjusted. Let me find the yen. All my symbols just got discombobulated. There we go. How did that happen? All right, so the yen trade here. This is, we were buy the dippers on this thing for a long time on the long term, and now it's very, very similar to some of these banking stock type actions that we've seen. In my opinion, I've got to see this close above 122.36 again to get happy about being along the yen. We got to sit on the sidelines. This profile appearing above is not good. And right now, the yen is a no trade until we get a close above there, or we can get some new profiles appearing on the daily to try to pick some battles again on the long side. But right now, technically speaking, all things considered, this is a breakdown, guys. All right. And the stops initially were below in the long term, below this 121.81. So that's it. Got to wait and see now. We're going to take a look at Apple really quick, 10 seconds. It's in everybody's portfolio on the planet. New resistance area around 117.65, stops above there, target down below about 100. Don't like buying this thing. Stay tuned, guys. Larry's next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.